Welcome into the next episode of the Zach Fowl Show. Today, we brought on Erik from Pathlayer to talk about a topic that I started unearthing as kind of a rabbit hole just in the last year in crypto. As many of you who have listened to the show now for a while know, I'm not super comfortable talking about crypto, Bitcoin, Ethereum, XRP, mainly because of all the corruption that surrounds it, from Prospera and Zeds and Freedom Cities to the fund for Donald Trump's own cryptocurrency and his own meme coins. There's a lot to unpack. So today we're unpacking the World Liberty Foundation, which is the Trump family crypto fund, as well as the Melania and Barron coins, and the overall corruption that seems to be found in all of these shit tokens and meme coins all around the crypto space. So without further ado, Erik. Erik, brother, how are you doing?
Good, man. Happy to be here. I've
Happy to have you, dude.
Been a fan of some of those big Instagram videos you've been putting out, and they've helped me connect a lot of dots too, because there's all these different spheres of knowledge that you have when it comes to what's going on in the world or what has been going on in the world. And I think it's very helpful the way you guys have been visually connecting them. That's been really cool to see.
And it all does seem to connect at the end of the day, doesn't it?
That's how it goes, man. Everything is interconnected.
So that brings me into my first question. Your expertise is in crypto. So first of all, just tell me about your background in crypto.
So like most people, when I first came across Bitcoin, for me, it was back in 2013. I kind of wrote it off. There wasn't a lot of useful content out there back then. I was probably like one or two articles away from like really falling down the rabbit hole. But when I first found it, I was like, oh, wow, that's crazy. This thing's like $20 a coin at the time. And it just seemed like this very foreign kind of internet currency that I came to in a dark corner of the internet, because that's where I used to like to spend my time when I was procrastinating university papers and other more normal work, I guess. But I came back to it in 2017 when a friend of mine kind of asked me if I had heard about Bitcoin before and told me it was $1,000 a coin. So that's when I was like, oops, I think I missed something here. Time to go back and figure out what I missed. And that's when I like really jumped in. I threw more money than I should have into it, bought all the different hot coins, Dogecoin, Ethereum, all these other coins. And I didn't really know what I was doing, but I was having a lot of fun doing it. And I, stay up late, just like reading all kinds of different things and following people on Twitter, talking with friends about it. And it was just a hobby at the time, something I was doing at night while I was working at startups during the day, doing like business operations type stuff during the day. And I liked the idea of working in the space, but I didn't really know what that meant at the time. And then in 2020, that's when it kind of became all the dots connected, I guess. So I ended up taking all my startup experience and parlaying that into the Bitcoin space with a local company here. And then a few years after that, I moved on to just do my own thing, just consult in the space, because what I really missed, I think, was the educational stuff, the one-on-one, the group kind of formats, doing webinars and stuff like that. So that's what I've been up to for the past 2.5 years now. I work with some companies, some individuals. Sometimes it's like, portfolio kind of investment type theory. And then other times it's more technical. It's about like the security and how Bitcoin actually works, because most people don't know how it works, even if they're pretty good at using it. So it gets more and more technical the deeper you dig, which is just what I kind of thrive on. So that's how I got into Bitcoin and stayed in Bitcoin.
I feel like for a layman, that's how we all feel. It's like we get it, but we don't get it. Mm-hmm. It's a new form of currency. So to act like we just automatically understand this crazy thing, we went from green paper equal money to it's a coin, it's a blockchain. So explain to me, you said that some of the technical stuff. Mm-hmm. Explain for anyone listening that does not know the difference between, and frankly, I could use a debrief on the differences between blockchain and crypto and how they support one another but are not the same thing.
Okay, yeah, will do. You just triggered something for me, is how little we actually know about the green money too, right? Because once you start learning about Bitcoin and stuff, you start to question.
Yeah, talk about rabbit holes we can go down.
Yeah. So yeah, that's kind of how I started connecting dots, because I went down the whole like, what is the Federal Reserve rabbit hole, like, when I was like 18 years old or something.
Well,
But yeah, blockchain, crypto, it's good to kind of clear that up, because when I first got into the space, blockchain was like the buzzword. That's what everybody was excited about. They're like, oh, blockchain can be used to solve all these different problems that we have in the world. And this is when you saw that whole ICO era, or even just publicly listed companies changing their name to XYZ blockchain and getting this big boost in their share price. So that was when people didn't really understand what blockchain was. It was this really cool kind of buzzword. But to put simply as possible, blockchain is just the ledger format or the technology that makes Bitcoin work. So right. It's not that complex, right? It's basically a chain of blocks, meaning blocks are just groups of data or transactional data that get added in a chain to the public ledger. So the reason it works like that is because we need to basically create a time chain to say what was added to the ledger in what order. And each time a block is added, the network basically agrees that that block is valid, and therefore those are all part of the ledger now, from today, evermore. So
and then comes the wallet IDs to manage to actually communicate with that blockchain and confirm it belongs, things like that.
Yeah, so if I send you Bitcoin, it goes from my wallet to your wallet, and that transaction goes in the next block. And then as soon as the Bitcoin miners confirm, like, yep, that is in that block, and the whole network agrees, says, yeah, that's a valid transaction, it's basically written in stone. So there's no reversing it. There's no calling your bank saying, oh, no, this guy scammed me, I want my money back. It's sent. It's final. So
that brings me into Oh, go ahead, please.
I was going to say that was the big innovation that everybody was trying to copy, right? They were taking, they wanted to be the next Bitcoin, so they would take Bitcoin's design and then optimize a few things, say, no, we want faster transactions, we want more computational ability, we want to be able to use it for not just money, but for this problem to solve supply chains or something like that. So that's why blockchain for X was such a big industry for a little while. But these days, it's kind of, when someone says to me, I'm not really interested in Bitcoin, but I'm interested in blockchain, that tells me they're pretty like early in their understanding of this space, because blockchain is just a technology now, and it's used for most crypto coins out there, not 100% of them, surprisingly. There's some that use different technology to work, but I'd say like 99% are based on blockchain in some way, even if the design is like wildly different than Bitcoin's infrastructure.
So from something that is probably a simple question for you to answer to something equally as simple, laundering, and these meme coins that have popped up, and these just frankly, people are putting it schemes around meme coins, from fart coin to Melania coin. It seems like there's a coin for everything and everything in between. I've seen social medias that use coinage. We've seen Discord platforms use that as their form of leadership monetization for growth. Like this coinage is going to be our future, but it seems like you alluded to earlier, in the earlier years, as people do not even understand the basics between two very fundamental metrics around cryptocurrency, it seems like that's being taken advantage of. Can you allude to a little bit of that for me, of where you see the most happening right now in terms of crypto corruption?
Yeah, so I'll start on the meme coin, or how easy it is to create your own meme coin first. So that's what you're seeing right now, is this massive saturation of there being pretty much no barrier to entry to start a coin. That also started back in 2017 with ICOs, which was an initial coin offering. So you could be a startup and have an idea, and instead of having to go through the very lengthy and expensive process of doing an IPO on an exchange, you could do an ICO. So instead of an initial public offering, an initial coin offering, where you basically cut out all the middlemen. You say, we're issuing a coin, if you want some, invest. And then you could basically take your Bitcoin or Ethereum or other token in some cases and invest, and then you get your allocation as soon as it starts trading. So that created this explosion of these types of companies, and most of them were, I mean, bad businesses at best. Some of them were straight up scams. It was quite easy to launch your own, but that's what led to like hundreds and then thousands of coins back then. These days it's millions of coins because the barrier to entry is even lower. So like you and I could go make our own meme coin today, probably take us about half an hour and, you know, less than hundreds of dollars to create.
Wow.
But then we need to get people to buy into that, right? So that's when a lot of this insider kind of collusion happens, is there's groups of people who basically do this as a business. It's just like a supply chain for them. They just keep churning out new coins over and over and over again. And then they distribute some to the people they know, and then they bring some people on board, try to get some momentum going. And then there's a bunch of other investors out there who are watching for these types of coins to get some momentum, and then they pile in, and that's when you see these charts kind of going up in a straight line. So the Trump meme coin was the absolute extreme of that, right? Because you had the president of the United States from his official Twitter posting a link and saying, this is my meme coin. And that's why you saw it go up to billions of dollars in like 24 hours. I remember seeing that, and I was like, is
on the
this
strategy
real?
of it seemed like you took on the strategy of the Hawk Tuah girl.
Yeah. Oh yeah.
Let me use my moment right here in the spotlight to put together a coin, which, like you said, is very easy to make. You just need momentum and attention behind it, a lot like politics. So if you agree with the political figure putting it out, it makes sense it's going to gain momentum. How does that lead to the fishy activities on the background? Why does crypto make that so easy?
So the interesting thing about crypto versus Bitcoin. So crypto is always centralized in some way when it starts out, because there are people who need to create the coin. So like if you and I made our own coin today, we are basically the insiders, right? So we control the rules of the game. We control how many tokens we give ourselves. We control how many tokens there will be in the future. All of that is just available for us to upgrade it or change in the code. There are ways to write that code where we can't change it, and then we can be kind of open about it. And those are kind of the fairest meme coins, I guess, if you want to call them that. But there's always somebody who has an inside track, whether it's knowledge or we get a pre-allocation or something like that. So with the Trump coin, they actually only issued like a very small percentage of the supply to the general market. I think it was like maybe 20% or something like that. I would have to check the numbers again, but basically only 20% was available for the public to buy, and the rest is kind of controlled by that project. So they can do with it what they will in the future. So that's part of what made it such an extreme form of this kind of extraction of value from the public markets.
Yeah, it looks like right now, I'm pulling this up. I'll share my screen if I find. I'm trying to confirm what you had said.
Yeah, there it is. 80% owned by one wallet, I think it says there.
Right here? Yeah.
Yeah.
Yeah, you can see my screen?
Yeah.
Perfect. Yeah, 80% owned by one wallet. Interesting. So public distribution, it says 10% liquidity, 10%. So does that mean only 10% was actually available?
Yeah, so when they say liquidity, part of the reason it's so easy to deploy these is that they trade on automated market makers or decentralized exchanges. So they need some available liquidity basically locked in the decentralized exchange for people to be able to buy and sell it. That's another thing that's really made this a lot more available to people like you and me who could start our own coin. Is back in like 2017, you had to get listed on a Coinbase or a Binance or something like that just to get trading at liquidity. So the availability for people to actually buy that token. Whereas today, it's all just code, right? There's all these different platforms, both on Solana and Ethereum, that basically enable instant liquidity. So you just got to get that initial momentum going and then keep it going if you want your value of the token to keep going up.
Right. And community-wise, that's extremely important because you need to have seemingly a band of brothers that are ready to ride or die for this coinage, this new form of currency. Just like the dollar doesn't hold any value if everybody says together, we don't hold any value in this. The value is directly tethered to petrodollar and our trust in the government. That mixture. We got rid of gold, 71, I believe it was. Some say 33, but regardless. With cryptocurrencies now today being just as fiat as the dollar in many cases, and now being completely based off community trust and push behind it, do you see that things like the Barron Trump and the Melania Trump and the Donald Trump coins as just a simple way to earn capital? Because we have his own pulled up. Let me actually share my screen real quick. And you can answer that while I pull this up. Do you think it's simply just a method for gaining capital, that there's no other reason other than that?
I would say it's both. So it can be a useful technology when applied in a productive way. So the difference between the Trump is arguably like one of the most centralized meme coins out there, meaning that most of the supply is controlled by a single foundation or group of people, and the minority is just basically shilled to the public, and they ended up losing a lot of money, right? That was like the peak of the meme coin mania. There's no one bigger than the US president when it comes to somebody shilling a meme coin. So that really did mark the peak. And I think Melania and Trump coins together was like they peaked at like a combined 13 billion in value or something like that. And then they crashed. They're down like 99% now from those highs.
But to those that hear that and think, well, what if they just got out at a time where they knew it was going to be great? Like you can see, right here. Let me see if I can zoom in. Doesn't look like I can.
That's the meme coin game, right? Is that started getting faster and faster, where these new coins would launch, and then the peak is often like tomorrow. Whereas in previous cycles, it was like the peak might have been months from now.
January 19th, sorry to cut you off. January 19th peaked at $45.47 per coin, with 30 billion in 24-hour volume. Today, last 24 hours, we have it priced at $2.93 with 96 million in the last 24-hour value traded. So I mean, we've gone from tens of billions to 30 billion at its peak to in the tens of millions. That's a significant drop. So why should anyone trust any coin? Because can't you throw the same exact argument around crypto, around, because people will say Bitcoin, like, there's emails now that show is Epstein involved in Bitcoin? Is that's a weird one. We don't know who actually invented it. It was this mystery man out of Japan. I believe it was 2009, I believe. There's a lot that I guess benefits Bitcoin in the fact that maybe it is truly decentralized. Maybe there truly is this miracle that happened of the person who held the key died with the key, and now is truly a safe platform for future currencies. But what's your argument, or I guess your position on whether or not it could just simply be a CIA rug pull blockchain in all these Ethereums and XRP? And I do have questions about Tether, but specifically just around like Bitcoin and crypto as a whole.
Perfect. I was hoping you'd bring up the Epstein thing, because I remember reading that in the files and I was like, oh no, this is going to blow up.
Every meme boy is going to be asking me about this. So what do you tell them?
So I'll back up a little bit first. So the difference between, I guess, every other crypto out there and Bitcoin is the fact that nobody has any more control over Bitcoin than, or any majority of control over Bitcoin. So even if you were Satoshi and you owned as many coins as Satoshi has, which is a significant portion of the total supply, even if he started moving those coins, so if those coins started moving, I can tell you there would be a massive crash in the Bitcoin price, but it wouldn't go to zero. Most of that would be an emotional reaction.
Oh, he does have an active wallet.
It's not active, so it hasn't been active since 2011.
What is the definition of active?
Active would mean any of those coins moved out. So because
okay, so it's not to say it isn't still active in the sense he could access it, or is there any way to know if somebody has access to their wallet?
We know for a fact that nobody has sent coins out of it. So that's something that we can go view on chain right now. It's fully transparent.
But we wouldn't have any clue to say if he's logging in to say, where's my portfolio at? Like just like me, like where's my fart coin today? So we have no proof that he hasn't done that.
Yeah, because on chain there's no account to log into, right? It's either you broadcast instructions to the blockchain to move those funds or you don't. So we would need to see his wallet basically sign a transaction. Yeah. So, most people like me think that he has either intentionally lost them or he might have lost them through death or something like that. Or Satoshi was potentially a group of people. I'll touch on like the CIA thing, the Epstein thing. So there are some technologies used in Bitcoin that were influenced by government agencies. So I believe the NSA was actually involved in the SHA-256 algorithm that is used in Bitcoin. Okay. So what that's basically for cryptography, and it's used in a lot of different technologies, right? Basic, how do I explain this simply? So basically like public key, private key, cryptography. So your ability to unlock your wallet very easily because you have the private key, but impossible for anybody else to guess that private key without just manually guessing over and over and over and over again. That would be a technology or one form of technology that's used in Bitcoin. SHA-256 is used for not for private public key cryptography in Bitcoin, but it's used for another type of cryptography that basically makes it impossible to guess keys without manually guessing over and over and over and over again. So this is part of how Bitcoin mining works. Is you've heard people say proof of work before. You basically work by guessing combinations to solve a block in the blockchain. That might be getting a little technical, but basically what Satoshi did is he took a bunch of existing technologies like SHA-256 and public key, private key encryption, and even some other forms or attempts at internet money, like hash cash and other ones. He took a bunch of their kind of concepts and then combined them into something that ended up getting this momentum and eventually decentralizing to the point that nobody has control over it. So if in 2009 or 2010 you understood what Bitcoin was going to be, you would be able to compromise the network. But nobody understood it back then. Nobody with the power to influence the network understood how big it was going to become. And now it's kind of like the genie that can't be put back in the bottle.
Because the amount of time that surpassed before people even knew what it was, before it had gained value, it's now to a point where it can't get that form of like almost Trump or Hawk to a like meme coin spikes. Is that what you're saying?
Yeah, because everybody knows how this game works now, right? So if you start one from today, you don't get a chance for that network to decentralize before everybody tries to like
via a bunch of random people buying it.
Yeah, buying it or having influence over the network or the rules of the game in some way.
Got it. Okay. I want to bring up the corruption graph, and I'll talk through for my radio headphone listeners what we're looking at here. But I want to bring up my entire screen. Boom, bam, bop. Okay. So we're building out this corruption web. We have a lot of different topics in here, but one of which we're slowly building out is crypto. So there's a couple individuals, the Trump pardon of Mr. Zhao. I mentioned Ripple. But I don't want to leave this topic real quick of the meme coins, the amount of profit. This says $385 million in profit went to him. I guess that was tracked via his wallet, which we do have access to according to, did it get moved? It's over here now. World Liberty Financial, apparently. So your thought of it being fraudulent in some way, or like you said, just knowing when to pull the trigger, when to get out, definitely tracks. I guess I still don't go in too deep on the crypto thing myself because I still worry about the overarching project. being somehow involved in the mud that is the corruption of our government. I mean, dog, like when I zoom this back, it takes like 3 minutes to load this on mobile. It takes forever to load in. The amount of infiltration of evil and greed and power hungry individuals to like every sector of life, dude. I just wanted to enjoy sports. I just wanted to watch basketball. I wanted to know who the backup receiver for my team was.
That's what they want you to focus on.
I know. I'm not even allowed to enjoy soccer anymore. I know. I get it. I can't watch a movie without thinking, wow, how docile I am while I watch this Timothée Chalamet ping pong movie. It stinks. No, I get it. But that's where my brain sits. And so my bias lies in nothing is truly decentralized. And for the thing that has gained the amount of momentum it has, I mean, this conversation could easily be had when it's at like 1,000, 2,000, which, by the way, when you were reading those articles back in like, you said early life, how much was it then if you had pulled the trigger?
Bitcoin, the first time I saw it?
Yeah, because you said if you went a couple articles deeper, you would have.
It was about $20 a coin when I saw it.
Oh! I'm sure you've had a night or two thinking about that. Okay, so how can I be fully sure? And you as an investor, as an advisor, this is your job, so I'd assume you're sure. Like, how can you be sure without a shadow of a doubt that this has no government involvement when you know government technology has been utilized? Yep. And the person of origin remains this ominous, mysterious figure that has unforeseen whale-like holdings of it, which is normal for the owner of a coin that they believe in to probably do. How do you know without a shadow of a doubt?
Yeah, so lots in there. So first of all, Satoshi got those coins by playing the rules of the game like everybody else. So he was mining the coins back then. He didn't get an allocation or what they call a pre-mine before Bitcoin actually existed. So he was basically playing the same rules of the game that everybody else was back then. He just happened to be the first person. So obviously he accumulated a lot while it was very low value, right? Pretty much worthless at the time. It was not real money until somebody was willing to take it in exchange for some other form of value, right? So there's that part of it, and all of that is verifiable on chain. You and I can both go look at the blockchain and see every transaction that's ever happened, and we can audit it to say, yes, these are fair rules. There's no insiders who get to play by different rules, which is exactly what the fiat system is, right? Where you have a combination of government types, bankers, the Federal Reserve, and then all of the companies who are disproportionately affected by new money coming into the system. So the BlackRocks and other giants of the world, when more money is printed, they own all the assets. So it influences them or benefits them more than the rest of us, right? By the time that new money all trickles down the economy and gets to us, normal people like just working salary jobs or running small businesses, the dollars are usually worth less by then.
Right. You're describing the Kantian effect.
Yes,
which is
that's good.
Yes,
I was wondering if I'd have to say the word.
Asset holders, banks, and government officials are the ones that reap the rewards of money printing. Right.
Yeah, and they're the ones who make the decision to print more money, right?
Exactly. Yeah. So the argument does not have to be made, at least personally for me, around crypto and Bitcoin's legitimacy and its logic and what we know about it. Right. Yeah. That to me is a ship that has sailed. You haven't done research into it if you don't understand why people say it's the answer. Because ultimately, by its logic, by the rules that it plays by, it should be. Mm-hmm. I hold off a little bit of doubt, though, in being the guy that says, run to this over, say, silver and gold, which I hold heavily.
Yeah.
What would you ever say that you think Bitcoin is somewhat more reliable? Because here's my own devil's advocate, right? Let's imagine there is control. Let's imagine there is a legion of people at the top orchestrating. And let's imagine that they're simply using it not as a rug pull, but as another wealth generation tool. And they want to make millions off of it. So they are going to push Bitcoin to 800K a coin and $1 million a coin and Ethereum above 30K because they want to get rich off of it. Maybe that's the theory. I don't know. So I could very well fold on my own argument in saying it's infiltrated by. It could be the golden goose for them that they're building on. I don't know. I don't know anything, man. Every
They
time I
would
learn
be
something, I learn that I learn. Every time I learn something, I also learn that I know nothing.
no. It's great to think adversarially like that, right? Because that's the way the world works.
Yeah.
Um, but if I was a person who wanted to disproportionately benefit from a coin going up, I would be better off, or Bitcoin would be the hardest, most difficult one for me to do that with.
Right. Okay. So you
Unless
hold a
unless
big
I had
storage of value on that then.
Yeah, unless I was Satoshi, right? Unless I um, was able to basically get in on the ground floor before any of the appreciation happened. But that's why you see all these other coins that exist, right? Because they don't want to play the Bitcoin game. That's the slow game. They don't want to make 20 or 30% a year on average. They want to make, 100x. So that's why they convince everybody else, nope, I have this new coin, it's better. And if you buy my coin, it's going to go up in value. And that's all this has ever been, right? The rest of crypto has been all about speculation. Meme coins are just the most extreme version of that, where we stop pretending it's about anything else. It used to be about, technology or my business case for utility or something like that. But meme coins, we just kind of threw all that other stuff out, and we were like, you know what? It's always been about number go up, so let's just have fun while we're doing it. My meme coin is called, dog with hat or something, and then buy it so it goes up. So yeah, that is the game, which I would say is kind of the peak of fiat economy, right? Is we all have to speculate and try to gamble our way out of arguably a track to poverty, try to make it before it's too late, right? Whereas Bitcoin is more of like the digital gold kind of version, stacking something that's going to go up in value, not tomorrow, not next month, but like very slowly over time by comparison to the other stuff.
And one thing that I don't think has been mentioned is also the finite nature of Bitcoin. It can't be printed. So
yeah,
there will be a day when it's gone.
Yeah, which is the opposite of fiat, right? Which is why governments typically haven't liked Bitcoin up until recently. The Trump government has been the first U.S. government to be to even consider a friendly stance against Bitcoin, looking at it as more of how do we use this because it's not going away, versus prior administrations like how do we stop people from using this, how do we keep this out of the existing system. And now you have the government in the U.S. trying to progress here, and you have the other part of the establishment, the banks, kind of pushing back because they see it as a threat to something that they've had a monopoly over for a very long time.
And that seems like something where we can get into deeper conversations around the latest, it was ISO 20222 and things like the Genius Act, where we're trying to make way for this new form of currency and this new technology. Some conspiracy theorists would even go into the countries that don't have a central bank that is capable of taking on such tokens, which does involve Iran and a few others. But I will send us down rabbit holes of speculation. I want to lay down a couple things. Jeffrey Epstein was an early investor in Coinbase. He made a $3 million investment when I was playing poker with it. Daggone, my guy knew something. This was getting tossed around in Yahoo pool leagues. And he said, throw it 3 mil right now in 2014. And we can see that here of his asset holdings, 3 million, actually 3,001,000 is the amount he had in Coinbase. So there's obviously argument to he was just a really good investor. He's also made, significant investments in other things such as Palantir and others, but Coinbase obviously sticks out. Coinbase also has a deep relationship now with BlackRock, and that's Larry Finkelstein right there, CEO of BlackRock. But I want us to focus the end of our conversation on a topic that I think a lot of young men in the crypto space have heard about, if not invested in, and it's Ripple, whether they know it or not. Because Ripple oversees, and if they oversee more that are prominent, please let me know. I'll use my limited knowledge here. XRP and XLM. And again, with my layman term explanation, XRP is a coin that allows for transfers that are faster and cheaper in currencies than the typical fiat system banking system allows for. And so XRP would be incredible if it was widely adopted to the tune of trillions to hold up the banking economy, because trillions gets transferred every single day internationally. And in a bright, beautiful unicorn-filled future, if that were to happen, Ripple rips. XLM, I've heard, is kind of like the personal version of that. Instead of international banking, almost kind of taking on a PayPal-like effect, lower of the two coins. With that being said, and with giving you room to correct any of my definitions, Ripple's one of the largest donors to Trump. Ripple has people right next to the Dave Andreessens, the crypto czars, in the cabinet. And you even brought up before this podcast that Ripple seems to be the name that we can really throw some daggers into. So on my definition in Ripple, take the mic.
I'm going to upset a lot of people here because Ripple has a diehard community that comes to defend it very hard when people start taking shots at it. For full picture, it was actually the first coin that I ever owned. So I actually got a very small allocation in 2013, back when it was worthless, like less than a penny. And then I kind of just forgot about it, sitting in a wallet for years. But so I've seen that full kind of timeline, I guess, from all the way 2013 to now, and I've had a very different perspective on it over that time.
Tell me how that perspective has shifted. So you started with, okay, I have it, I'm holding it, it's just another coin, to where are you at now?
Yeah, I bought the vision at first, right? I was like, okay, this is cheap, it's new, it's I think a lot of people get thrown off by the fact that the unit bias, so each coin is very cheap by comparison to things like Bitcoin. But the market cap, so the value of all the coins out there, is actually very high, right? It's why it's one of the largest. You're going to see it on CoinMarketCap and other lists there, right below Ethereum and Bitcoin, close to Solana and Tether. But I think where people get confused is about the utility and how that brings value to the actual token. So when I first got into it, I was like, okay, I'm investing in this tech. It's going to be for bank transfers. It's going to help banks move money. That's a very important use case because banks suck. Banks do everything slow and expensive, which is true. But now that I've kind of learned a lot more about the crypto space, Bitcoin, blockchain, but also the banking space, is I've come to realize that I think people get very excited about Ripple because it takes everything they don't really understand about how banks work and everything they don't really understand about computers and blockchain and the tech side of stuff, and kind of combines them into one and says, we're going to solve all these problems. And that hasn't really come to fruition over the years. RippleNet does have some banks on the network. They do transfer money between themselves. It's more of a pilot project. I would say when you compare the volumes of those transfers to stablecoins, they're very, very small. So stablecoins have kind of come in and taken that use case, and it's working in real life. Like if we look at the volume of Tether and USDC transacted today, it would be many, many, many times the volume of XRP used in actual banking transfers or anything related to that. So that medium of exchange kind of use case is currently being fulfilled by stablecoins. And we can see that in real time, look at the numbers. Whereas that digital store of value use case is being done by Bitcoin, and it doesn't really have any competitors in that field, or no real competitors anyways. So right. XRP is kind of in this weird gray area, right, where it's not a store of value because it's not really decentralized. Ripple Labs and others hold not just a significant portion of the supply so that they can spend all this money lobbying government. They also kind of lay the roadmap for things, right? They have influence over where the ship is going and how XRP as a token kind of functions. So there's a lot of trust in that. You're trusting that kind of entity and the people in charge of that to act in your best interest and to, it's kind of like at best investing in a startup, which there's nothing wrong with that, but you have to know what game you're playing. You're not investing in some kind of decentralized token or anything like that.
To summarize what you're saying, it sounds like people who, and I hold some XRP as well, who are gung-ho around XRP are gung-ho around it for the utility of it. It can indeed be used for, and like you alluded to, it is being utilized for interbank transfer of currency. And the thought process of mass utilization would create this whirlwind effect of value. Of course, the market cap would go crazy. But what you're saying is the technology already exists, and to my understanding, came about later than a lot of the hype around XRP, but yet is already dwarfing the numbers in form of transfers with stablecoins and things like Tether.
Yeah, and Ripple knows that too. That's why they now have stablecoins on Ripple, right? So they want to, like many other projects out there, they want to capitalize on the stablecoin utility and hype, and they want to bring stablecoins to their network so that they can earn fees off of the transfers. But they're competing with all the other networks that already have those stablecoins, like Ethereum, like Solana, like Tron, which is a surprisingly large volume of Tether transfers. And then there's other new chains coming out, like this year, last year, that are basically optimized just for stablecoin transfers and doing it as cheap as possible. So we're going to see the cost of sending money just go to basically zero. Like today, I can send you some USDT or USDC. It'll cost me almost nothing to do it, and it would take a couple seconds for it to appear in your wallet. That is a threat to banks and payment processors and the Swift network, and XRP as well. So XRP, I don't.
Right. It sounds like it's just as much a threat to XRP because that's what they're bred on. And the argument is, things like Bitcoin, Ethereum, they're the same. When you remove, they're not really utility. But the utility is the same as the dollar has utility. Or like, when in our lives does monopoly money actually matter? Is when we're playing Monopoly. We're playing the America game. We're playing the dollar game. So the dollar holds value, and every currency has that quality. But the difference with Bitcoin is what you're saying, if I'm understanding, is A, the decentralized nature and public nature of it with the ledger, and we don't know who made it. And the second would be the finite nature of it. We can't just up and print away Bitcoin. There's a limited amount. It will only be mineable toward a certain point in time, I'm sure. And then the mining machines shut off and we can use all of our GPUs for data centers. Thank God. But I got pulled up here. Ripple, this is from CoinDesk. Ripple drops another 25 million into CryptoPack to sway the 2026 congressional race. Ripple, Coinbase, and A16Z made up the vast bulk of resources. And for those who don't know, Andreessen Horowitz is a huge connection up to this gentleman right here, who is the co-owner of it, Mark Andreessen, who has this nice purple line that runs across the crypto because he sits next to this guy, Dave Sachs, who is the crypto czar. He's his advisor. So we got the guy in the seat as the advisor. Then who's the owner of Ripple? What's his name? Because he's deep in there too. Brad.
Ripple. Yeah, Brad Garlinghouse.
Brad Garlinghouse. Because I've seen him go back and forth. Like it says, I'm trying to see when's the last time he was involved. This Garlinghouse and others to believe that the federal government's war on crypto indirectly helped Trump become elected. Yeah, I think definitely it was a big crypto crowd that voted for Trump. Big. I'm trying to see because I saw he was involved. Maybe it was through Ripple, maybe it was through somewhere else. But Ripple has been involved heavily. And just tell me why you think that is. And I'll take the mic after you. How does it connect to Cantor Fitzgerald?
So Ripple is a business ultimately, right? Just like Coinbase, just like A16Z, they all have their own personal interests or business interests that would be benefited by connections with the people who make the rules, right? So I think that what gets misinterpreted from the outside by normal people when they see all these different crypto people influencing Trump and the strategy that they seem to be moving forward with is they think that all crypto bros are like, oh yeah, the government's on our side. But there's a lot of infighting in the crypto space, right? Like there's people who believe only Bitcoin should even be considered for anything to do with the government. There's people who are invested in either Ripple or Solana or Ethereum or something who want their specific protocol to benefit from regulatory frameworks or the lack thereof. Mm-hmm. And there's other people who don't want government involved at all, right? They like that whole libertarian kind of cypherpunk ethos, which Bitcoin came out of. And, I'm kind of somewhere, I guess, zoomed out view looking at the fact that governments are going to use Bitcoin. And that's always been obvious just like any useful technology out there, it gets used by everyone, right? Doesn't matter where it came from. Doesn't matter if, the CIA or the NSA developed some technology that helped, create Bitcoin or cell phones or the internet or the Tor network, any of that stuff. Once it's out there, it's a useful technology if it's a useful technology, right? Bad people use cell phones, bad people use cars, bad people use Bitcoin. I would argue that cash is actually a lot better for money laundering than Bitcoin is. But, it gets a bad rap for a lot of that stuff, that it's used by shady people for shady things. And it's actually the most transparent money that we've ever had, both from a use perspective and from like a rules perspective. So I think that's the only one that has like a serious use case by central banks or governments or both. And I was very much in this whole like, yay, overthrow the system when I got into Bitcoin. And it was either they fight us and they lose, because the technology is something that you can't really stop. If they could stop it, they would have stopped it a long time ago, because it basically inhibits their ability to keep this fiat game running. And I think they figured that out. And now they're starting to look at strategies to, instead of fight it, to play along with it and try to benefit from it, and be one of the first countries to do so. So other countries have done so, like El Salvador is an example, who has been benefiting from Bitcoin for the last 5 years now, almost 5 years. And the US is obviously the largest economy, USD being the reserve currency. But they've been in danger of losing that reserve currency status. And I don't know how much you've dug into that yet, but when you have your enemies like China and Russia starting to, get away from using the USD as a reserve currency and starting to choose things like gold, and even like an oil-backed coin of their own, that's a massive threat to the US, right? So they have to kind of think of creative ways to get out of this situation that they're in. You can't really inflate the money away if there's nowhere for that money to go. So I think that they've started to look at Bitcoin as a way to be able to still inflate their debt away. But if they hold an asset like Bitcoin, it pulls on all these other levers as well, right? So it'll appreciate in value. So they're actually earning value at the same time, or growing value at the same time. And then they're also creating a demand through things like Tether. This is probably a good segue into Tether, actually. They're one of the largest buyers of US debt in the world right now. They're up there in where countries sit. Tether.
Oh, okay.
So,
got it.
Yeah, so USDT. So Cantor Fitzgerald, who you mentioned at the very beginning of this, is now involved in Tether. I don't know if you have that on your board there or not, but
Pull this up.
so Tether being the largest stablecoin, just to give everybody an overview here, they have to back their stablecoin with assets. So most of what they do is they just buy US government bonds. So they buy T-bills. And because there's so much demand for their stablecoin, they are buying tons of US debt. And that started to be noticed. And it's actually a meaningful demand of US debt. And Tether is used around the world, right? Not just in the US. It's actually used more outside of the US than it is in the US. So that's a good thing for the US to be able to generate demand or increase demand for US dollars and US debt overseas. So I think that they've kind of woken up to that, and they're looking for ways to maximize this. Instead of kind of fighting it like they used to, they're looking to embrace it. And what you have now with the Clarity Act is them trying to formalize a lot of that, and then you're getting pushback from the banks who are going to be threatened by this.
Yeah, I have here in 2024, January 2024. According to comments made in January 2024 by Cantor Fitzgerald CEO Howard Lutnick, now current Secretary of Commerce, that company was acting as a custodian for Tether's reserves. And during a February 2024 congressional hearing, Minnesota Congressman Tom Emmer, a cryptocurrency supporter, called the Wall Street Journal's October 23 article about this erroneous, observing that federal reports on global financial crimes showed the actual amount of cryptocurrency used by these groups to be significantly smaller than what has been reported by media outlets. Is that because... So I had it pulled up earlier, and I think I'm going to find it here. Because it seemed like from what you had said already is that a large portion, because let me break this down. The Cantor Fitzgerald relationship comes in because they were basically verifying their assets, verifying their reserves, from what I understand. And in that confirmation of the reserves that they held, confirmation of the assets that they hold, I should say, that confirmation was done by Howard Lutnick and Cantor Fitzgerald. And this congressman's like, I don't know. Here it is. At the end of 2023, Tether reported holding $63 billion worth of U.S. treasuries, $3.5 billion in precious metals, $2.8 billion of Bitcoin, and $3.8 billion of other investments, and then $4 billion in secured loans in its reserves. In January 2014, CEO Howard Lutnick said his firm reviewed Tether's assets and confirmed Tether held assets of approximately $86 billion to back the $83 billion in stablecoin in circulation. The majority of Tether's reserves held in cash and cash equivalents are United States T-bills, which are treasury bills held for a short amount of time, accounting for $72.6 billion. That's higher than the first number. Jeez. So that doesn't seem right to me when I look at everything I've been watching in the bond markets, how yields have stayed high, the Fed rate's been cutting, how investors are just so scared of inflation in the future. That's really keeping them just dovish on going heavy in treasuries right now. We had a couple treasury auctions over the summer and through the fall when we're edging on a liquidity crisis before the Fed Reserve stepped in and started reserve management, which was basically QE. And we're still doing it right now. They're hopefully here in the next meeting going to say whether or not it's going to keep going. I'd say it's probably going to keep going and probably for more. But it's a safe investment to hold our debt, but that's a large portion of their assets, no?
Yeah, for sure. So
is that normal?
Which part?
The large portion, I mean, $72.6 billion of the $83 billion that they have in circulation, about $72.6 billion is backed by treasuries. Is that standard?
Yeah. It's basically the risk-free rate, right? So that's like a risk-free investment backed by the U.S. government. That is what you would hold if you wanted to take on pretty much no risk. You're not going to hold just dollars, right? Because you're going to lose value over time. You're going to hold something that at least yields a little bit. So that's why they make about 5% on their assets, which is a lot of money when the total market cap of Tether is whatever it is now, like 100 and some billion dollars. But that is a good thing, right? Like you want them to be backed by some kind of real asset. A lot of the scary FUD or fear, uncertainty, and doubt in the market has been, since I got into it in like 2017, has been that Tether is not backed by anything, that they don't have the assets to back the value that they're basically putting into their token, meaning that, it's worth $1 today, but maybe in the future it won't be because they're not actually backing it with anything of real value, or it's fractional where they only back a portion of it. But basically what Cantor is doing there is they're doing the audit saying that, no, it is backed by assets and here are the assets, and it's actually worth more than the current market cap of Tether, which is what we all want as users of Tether, right? You don't want to hold a stablecoin that's not backed by anything. You want to hold a stablecoin that is backed by something.
But you know why I doubt Howard Lutnick.
100%. Yeah. This is another one of those things, right? Like, I'm no advocate of Howard Lutnick or Cantor or anything like that, but this is where you kind of see the intersection of these kind of new companies like Tether getting involved with the existing system, and it's going to be the big boys in the system, right? It's just like when Coinbase raised money from Epstein in whatever year what that was, like 2014 or something, I think. Mm-hmm. And the other one that was in the Epstein files was Blockstream, which is, they don't control Bitcoin, but they do, especially back then, they had a lot of influence over the development of Bitcoin and the Bitcoin network and stuff like that. But I think, Epstein might have been smart or had a lot of those kind of early stage investments come his way at good times because he was so connected with people with a lot of money. But I don't think he really understood where Bitcoin was going. I don't think that he I don't think anyone back then really understood that Bitcoin was going to be worth what it is today. And his investment in Blockstream actually ended up, I think they ended up pulling out eventually. So Blockstream and its founder getting a lot of bad press for the last little while, but I don't think it's a good look for them for sure. But I also wouldn't say it indicates that their whole business is a fraud or anything like that.
Well, it's obvious that Trump, as we said, has profited off of not only just crypto, but Howard Lutnick profited off of Cantor Fitzgerald. His sons are running it. The tariffs being shot down.
Yeah.
Whether or not he had the inside edge or he's just a really smart guy, people that met with him, and there's an article from 2005 said, he wasn't all that impressive to the other people that held his pedigree when he was in the room with quote unquote equals. Maybe he was just smart, maybe he was just lucky. And then you get Howard Lutnick, who Tether, to my understanding, is what's going to be the network holding together USD, right? Our stablecoin. Or is that not correct?
They don't have a monopoly on it. So I think the system actually in some ways prefers USDC. So USDC is issued by another company, Circle, that actually had some ties to Coinbase back in the day. So those are basically competing with each other.
Right. And, okay. So there's still an open position at quarterback. You can still fight it out in practice. Got it.
Yeah. So they want stablecoins to basically, this is what the Genius Act is they want stablecoins to abide by a very specific set of rules to be considered like legal stablecoins in the US. Tether was originally not compliant with that. But they're basically going to create or have created a version of Tether that does comply by those standards. And Circle's USDC also is basically going to apply or comply with those standards. And then if you wanted to issue your own stablecoin, because anybody can, there's actually like hundreds of stablecoins out there, but those are the two dominant ones. If they wanted to be like a legal stablecoin in the US and for banks to be able to hold them and use them and stuff like that, they would have to comply by the standards being set out in the Clarity Act.
Roger. Yeah. Well, if I were to summarize your advice, brother, as I know you are actually technically an advisor in this space, at mass, I would say storages of wealth and value and assets are number one. Bitcoin is just another asset. It's like a home. It's like a collection of luxury cars. It's like a U.S. security bond. It is a asset. It has non-infinite access like the fiat dollar. It has utility in its lack of origin story, I'll say. And then, like you had mentioned, which is a great point, the slow and steady, we don't really know what we're doing here, adoption and growth before someone could take hold of it. That meme coins, like the Melania Trump coins, probably not great investments, probably shouldn't jump on meme coin wagons for any real reason at this point. And that Ripple needs to be looked at through a fine, look through with a fine tooth comb, like really dig in there and see, is this the utility you think it's going to be versus do stable coins and those technologies really kind of cancel that out? And is Bitcoin left the lone answer, the lone dog in the fight that can handle the market cap of what's needed, the technology behind the system that it runs on, and of course the transparency of it. It's decentralized. It's got a public ledger. It's got all the check boxes that I think could really solve the dollars problem, which we're not getting. So, because you can't. Are there any other points you'd add to that as we finish off, brothers? Any last pieces of wisdom that you want to bring to the people listening? Because I'm going to keep looking through it from the fine-tooth comb of, or I should say the lens of the billionaire influence. But again, countering my own argument of that being a bad sign with Howard Lutnick. I had another article pulled up, I'll put it in the notes, that said Cantor is putting everything they got into crypto that they said back in January. Just throw it in, just anything, go. And now they're investing in Tether, and I see a clear and obvious path in a lot of ways toward this could just be the wealth asset vehicle that they know is inevitable. So let's grow it. Let's get in on it while we can and grow with this, because this is going to be the next housing boom. This will be the next, growth of the economy from the 50s into the 70s. I mean, this is, what a lot of people in the last year, knew that gold and silver was as things were hitting turmoil. But you do think there'll be that breaking point where Bitcoin is widely adopted, widely accepted, widely understood, and it's the thing that you're advising people now to buy more of?
I try not to advise specifically because I'm not a financial advisor, but
can't use the word advise. Yeah. We'll change the word.
A lot of what you said there is a really good way to kind of wrap things up, but I'll just say this is my perspective is not just from my own journey with Bitcoin and crypto. It's also from helping now hundreds of people on their own journeys and kind of seeing the patterns that everybody tends to go through, where you get really excited when you get into the space. You see all the potential, you see all these numbers going up, you see all these kind of brand new crypto coins, doing 50x or 100x, and people start thinking, oh, I just got to hit one of those or two of those and I'm set. And so they kind of view it as this like massive opportunity, when more it's kind of more like hyper gambling, I guess. Can you make money doing it? Yes. It's like I've hit 100x before just on like a tiny little meme coin. But it was not with like a significant portion of money, right? And then I've also lost and seen people lose lots and lots of money by things going down 98% or 99% over time. So I would say that when people first get into this, they have to experience that firsthand, where they get really excited, they start making a lot of money, they get kind of high on it. Dopamine is firing pretty hard, and then it goes the other way, at least as hard when the market crashes, and a lot of people end up in denial about the amount of money they've lost. And then I would say after experiencing that, they kind of start to realize that, I didn't just lose dollars, I actually lost the ability to buy Bitcoin when it was much cheaper.
Right.
So like when I first started buying a meaningful amount of crypto, Bitcoin is only $3,000 a coin, but I thought that was too expensive. So I started buying all the cheaper stuff. And then, the next cycle when Bitcoin was like $20,000, $30,000, $40,000, that's when I was like, oh man, I'll never be able to buy as much Bitcoin as I could have back when it was 3,000. So I might as well just suck it up and start buying Bitcoin now and like learn my lesson. Don't speculate. Don't put 90% of your net worth into very high risk crypto coins that are worth, these $1 million market caps and stuff like that. So I think you have to experience that to really understand Bitcoin and understand yourself as an investor, right? Or as a risk taker.